Every once in a while, a number pops up in the economic news that just makes everyone, from traders to policymakers, stop and take a second look. Well, in October, India got one of those numbers, a really big one. So let's break down what it is, and more importantly, why it matters. And here it is, $41.68 billion. In October, India's goods trade deficit, that's the gap between what it buys from the world and what it sells, hit an all-time high. Now, that's not just a new record. It's a massive, headline-grabbing figure that really demands a closer look. So what exactly is a trade deficit? Honestly, it's pretty simple. It's when a country buys more stuff from the rest of the world than it sells to the rest of the world. Just think about your own monthly budget. If you spend more than you earn, you've got a deficit. Well, this is just that, but on a huge national scale. Okay, so how on earth did we get to a number that big? It's a pretty dramatic story, really. It's about two lines on a chart heading in completely opposite directions, and fast. This table basically tells the whole story. Just zero in on October. You can see exports dipped down to around $34 billion, their lowest in months. But at the same time, look at imports. They absolutely skyrocketed to a record $76 billion. That huge chasm between those two numbers, that's our record deficit right there. So the first huge question is pretty obvious. Why did imports surge so dramatically? The answer? Well, it's shiny, it's yellow, and it's very, very popular, especially during festival season. And you don't have to look very far for the main cause. India's Commerce Secretary, Rajesh Agrawal, pointed the finger directly at precious metals. He basically said the surge in gold and silver imports wasn't just a factor, it was the factor behind that extra deficit. 200%. Let that number sink in for a second. That's how much gold imports jumped in October compared to the year before. We're talking about the value literally tripling, hitting an incredible $14.72 billion in just 1 month. And if you thought that was the whole story, get this. Silver imports jumped by an even more mind-boggling 528%. It was a full-blown precious metals rush, most likely kicked into high gear by the festive season and what some analysts are calling speculative demand, people buying not just to use, but hoping prices will go up. This chart really puts that gold surge into perspective. I mean, just look at it. The bar for last October's gold imports, that was already a big number. Now look at this year. It completely dwarfs it. This one single category had a massive, almost distorting effect on the entire country's trade balance. But it's really important to know that it wasn't only about gold and silver. Even if you take those really volatile items out of the equation and you take out oil too, other imports still went up by a pretty significant 12.4%. And that points to some broader demand in the economy for things like electronics, machinery, and fertilizers. Okay, but any deficit has two sides, right? Soaring imports were just half the story. To really understand the full picture, we've got to look at the other side of the coin. What was happening with our exports? And the top-line number for exports is just as dramatic. While imports were busy hitting record highs, our goods exports actually fell by 12% compared to last year. It's this 1-2 punch, imports up, exports down, that turned a big deficit into a record-breaking one. And when you dig into those export numbers, you see a pretty mixed but mostly challenging picture. Some of our biggest sectors, engineering goods, gems and jewelry, textiles, they all saw some pretty big drops. There was one bright spot, though, electronic goods. They kept up their strong growth, jumping 25%. So why the big slump in engineering goods, which is a huge export category for us? Well, the industry's own counsel points directly to trade policy. Specifically, those punitive tariffs from the US that kicked in back in late August, creating a real headwind for Indian manufacturers. And this wasn't just about one or two sectors or a single country. The weakness in exports was pretty widespread. I mean, look at this. Out of India's top markets, exports only grew in 5 of them. They went down in 15. That tells you there's a much bigger, more fragile global demand situation going on. So, we have the what and we have the why. But what does it all mean? Is this just a 1-month statistical fluke, or is it a sign of some deeper trouble brewing? Let's see what the experts are saying. This timeline really helps connect all the dots. You can see the pressure building. It started in late August with those US tariffs, then the deficit got wider in September, and then in October, the festive gold rush acted like a massive accelerant, just pouring fuel on the fire and pushing the deficit to that record high. It was really a perfect storm of all these factors coming together at once.
When you look at all the analysis, you start to see three main viewpoints emerge. First, you've got the official government view, which mostly blames the gold surge and a statistical quirk called the base effect. Second, you have the economists, who agree the gold rush was probably a temporary thing. But then there's the third view, from industry, which is a bit more cautious. They're pointing to a much broader global economic slowdown.
And this quote from the Federation of Indian Export Organizations really gets to the heart of that third perspective. For them, this isn't just about gold or tariffs, it's about a tougher global environment for everyone, with weaker demand and a lot of uncertainty that's making it harder to sell goods anywhere in the world. So let's just put it all together. October's record deficit was basically a perfect storm. A festival-fueled gold rush sent imports through the roof. Right at the same time, our struggling exports were facing headwinds from U.S. tariffs and a cooling global economy. The big debate right now is whether this storm is going to pass quickly or if it's a sign of some rougher seas ahead.
Which leaves us with the ultimate question, right? Was this record-breaking number just a temporary blip, something driven by festive cheer that will fade away? Or is it an early warning sign of more fundamental economic challenges for India on the world stage? I guess only the next few months will tell us for sure.